Welcome back, everybody, to a long-awaited episode of the Weekly Wrap. I'm going to make this a new, refreshed series of the Weekly Wrap. It'll come out every Friday afternoon, where I'll go over the main things happening in business, the markets, or whatever is newsworthy related to finance at the time. And then hopefully we'll have a collection of interesting episodes at the end of every week that you can use to go back and look through things that were going on at a certain period of time, or maybe you just want to listen to an episode to stay up to date on some things that week. So I'm excited to be back. I know it's been a while since I've recorded, but I am really excited to be doing this again. And this will be episode 1 of my new weekly wrap-up series. So without further ado, let's get started in today's episode. So here's a summary of what we're going to be looking at on the week. And again, for the audio listeners, you can listen to this on Spotify or anywhere where you listen to podcasts. Or if you want to see the slides, you can go to YouTube. I am going to be looking at a couple charts today, so if you want to look at the slides, it'll be available on YouTube, but you can also listen and pick up on everything that way as well. So what we'll be talking about today, Biden and Trump had their first debate last night, and that was interesting to say the least, so I'll be talking a little bit about that and what I took away from it. We'll look at Bitcoin and how it's continuing to consolidate over the last 3 months. The stock market continues to make new highs. It looks like nothing can stop Nvidia and the other big cap tech companies. And then I'll take a look at Bitcoin, and I'm going to compare that with gold and real estate. And we'll take a look at which asset better protects you against inflation. And then after that, I'll kind of just give a perspective on inflation in general. There's a lot of different opinions and just people talking about this, but I just have a few things that I wanted to share on that. And then at the end, we'll be taking a look at a couple of charts that were relevant for the week. So without further ado, let's get into it. So the first thing I want to talk about is the Biden versus Trump debate last night. In case you missed it, Donald Trump faced Joe Biden in the first presidential debate last night. It was actually the earliest presidential debate ever in American history, and that's just in relation to the actual election itself. So this is basically the furthest out from the election we've ever had a debate. I'm going to come at this from an objective view. I'm not here to support Joe Biden or Donald Trump. Frankly, I don't like either of them, so I'm going to try and come at this analysis as neutral as possible. But basically, Joe Biden did not look competent up there at all. He didn't look like he knew where he was. He said things that didn't make sense. I mean, obviously, he was probably on some type of like stimulant like Adderall or something to help keep him awake up there. But he's just getting to the point where his cognitive abilities are just not there. So kind of sad to see that. But also at the same time, it made Donald Trump look a lot better than he maybe actually was. He didn't even really answer any important questions that were directed right to him. Kind of avoided questions about January 6th and whether he would accept the outcome of the election. Didn't really want to answer that, and honestly, I don't blame him. Why should you answer hard questions when your opponent can just open his mouth and sound like an idiot? I think that's pretty fair sentiment. I think a lot of Democrats that support that party still are not really on board with what they're seeing from Joe Biden. And so that was pretty interesting. I saw a couple of theories, I guess, circulating that the Democratic Party put him up there this early on purpose to maybe show everyone why he's not a viable candidate for the Democratic Party, and that perhaps Gavin Newsom could be a candidate going forward. I don't really see that happening because the Biden camp came out again last night and today saying that he will be the candidate and that he wants to do a second debate. God knows why. But I just thought that was interesting. Maybe the Democratic Party has a little bit of conflict on the inside right now. Um, we'll have to see what comes of that. But yeah, the presidential debate was pretty interesting to say the least. And honestly, they didn't really even get into anything that important. They talk about some of the issues that makes everyone upset, like the stock market, abortion, those types of things. But as far as questions as I would have liked to have heard answers to, I would have liked to have heard answers on government spending, on closing the deficit, on why are we sending billions of dollars of weapons to countries that we really aren't even involved with. Like why are we printing money and running up inflation and perpetuating war? That's what I would have thought would be pretty relevant, but no, that's not what they talked about. So let's move on before I get any deeper into that. I just want to take a look at the Bitcoin price over the last 6 months. We had a run up really over the last year or so, but for the past 3 months, we've really been consolidating between, I guess you could say, just below 60,000 and the all-time high of 73,000. At the time of recording, you can see we were just below 61,000 US dollars per Bitcoin, but it's been pretty volatile in between those price ranges. Some people are speculating that maybe there's some selling coming from the Mt. Gox holders. They're finally getting their Bitcoin back. Obviously, no one knows whether they are selling, whether that selling is actually what's causing this most recent sell-off from 70,000 down to where we're at right now. You can see on the chart that we're kind of in the middle of the biggest slide in the Bitcoin market in the last 6 months. And you really just you don't know in the short term rather what's causing the price to go up or down, but it is pretty clear. We're after a halving. The halving was just 2 months ago. People forget. The ETFs were launched 5 months ago. And so there is a lot more demand overall in this space. I think a lot of people are waking up also to the idea of Bitcoin being an actual protection against the tomfoolery that's happening in the US dollar system. And so I think there's going to be a lot more demand. And obviously, we know with the halving, there's exponentially less supply every 4 years. So it is going to get interesting. This is the first Bitcoin cycle where the inflation rate year over year is actually less than the inflation rate of gold. The inflation rate for Bitcoin now, I think it's around 1.2%, 1.8%, something like that. It's between 1 and 2% this epoch, and the inflation rate for gold is around 2 to 2.5% per year. So that's pretty interesting. We'll have to see what happens with that. Obviously, gold is still the most valuable asset in the world, but we'll have to see what comes out of that. I think that's pretty interesting. So let's move on to the stock market, which continues to make all-time highs, led by the stellar year for NVIDIA. We'll take a look at the NVIDIA chart later at the end of the episode, but really interesting things in the stock market right now. I think we have the highest concentration of stocks that are contributing to these gains since like 2007, 2008. So I think that's pretty interesting. You have pretty much 7 stocks responsible for all the gains this year. Now, that's not irregular. Pretty much through every point in history, you have just a small group of stocks that are really driving the price of the index higher. And that makes sense. You usually have a couple companies, an industry or two during a certain decade that's really driving innovation and kind of the human experience or progress. So right now, that's companies like NVIDIA, Microsoft, Apple, Google, the ones that have really been delivering for a long time. I do think we're at a point where prices are maybe a little bit stretched. Obviously, no one knows when the market will come back down, have a correction, or even go through another bear market. But we are getting to levels now where I wouldn't be surprised by any type of selling. Like if I saw a 10 to 15% sell off, I'd be like, yeah, I mean, that makes sense. But at the same time, if we continue to make new all-time highs, that also wouldn't surprise me either, because people are really trying to figure out what to do with their money. Obviously, inflation's a real problem. and investing it into the stock market is one way you can kind of avoid that debasement, or at least protect yourself a little bit. But with that, let's get into a little bit of a conversation on defending yourself against inflation. I feel like there's really three main categories you can go into if you want to protect yourself against inflation. And this week's a great week to look at those three assets and how they compare against each other. Inflation's a hot topic right now. A lot of people are saying inflation's coming down, but prices have stayed up. The housing market didn't collapse, and people are wondering what they can do to protect themselves against inflation in the future. So first, let's take a look at Bitcoin. Actually, no, let's not take a look at Bitcoin first. Let's look at real estate first. I feel like real estate is really the bread and butter of storing your wealth in the United States, or at least it has been for the last, let's call it 70 years. Because typically what people do is they'll work a job, they had a pension, not really anymore today, but they maybe had a pension, and then they'd buy a house, and that house would appreciate over the course of their working life, and then they could either sell it for a bigger house, or they could downsize and do something with the money. Maybe they could travel with the money, but it was really your house that was the driving force of storing your wealth, I guess, of storing your buying power, whether people realized it or not. And that's still the case today. And a lot of people invest into multiple properties, not only for the store of value aspect of the real estate, but also to get extra cash flow if they can have people rent out those properties. Now, it's not always the most reliable store of value if you're leveraging yourself up to get people to rent to get those cash flows, because you can go through a recession, you can go through a period of people not paying their rent for whatever reason, and then you're really in trouble if you're levered, you owe a lot of debt on the properties, and people aren't paying their rent. Then maybe you're forced to sell, and the asset didn't really turn into a great store of value for you. So I guess that's one way where it's not always a perfect store of value, but even if you are doing it right, let's say you're even buying real estate completely in cash, 100% in cash, and you're holding it as a store of value, you'll still have depreciation. You'll still have to do repairs on the house. You're gonna have to put money into it, a lot of money to maintain it, regardless of whether someone else is living in it or not. So while historically it has been a good store of value, if you're just looking at the price of a house, you are still going to have to put money into it. It's going to take effort to maintain that, and that never really goes away. So I guess that'll take us into gold, because gold doesn't really have a cost of maintaining it. You don't really have to pay to maintain it, but if you're seriously using gold to store large amounts of dollar value, and you want that to be a store of value, you may have to pay a premium for gold. You may have to pay to somehow verify that it's real gold. You might have to pay, and this might be part of the premium, when you buy it, to have it shipped to wherever you may be. You might have to pay to secure it, to have it locked up in a safe. Maybe you pay someone else to lock it in their safe. It's not very easily divisible. You can't really divide up a gold bar really easily without melting it down. And it's also really hard to send. I can't really pay anyone or liquidate my gold quickly. Even if I do, there's a lot of hurdles involved with that. So while gold might be easier and less maintenance as compared to real estate, it's still really not ideal when you think about it as a store of value, because of all of the things that could go wrong. And really, if you think about it, gold isn't very liquid. You might have a shit ton of gold, but what happens if you need to sell it quickly? Who are you going to sell it to? Are you actually going to get the spot price for that gold? There's just a lot of things you have to think about. What if you're in a country where you need to leave that country quickly and you have a lot of gold? How are you going to get that gold out? What if the government, this happened in the United States, what happens if the government says you have to turn in your gold, or you're going to jail? So some things to think about when it comes to gold. Whereas Bitcoin is kind of a digital version of gold, it's completely scarce. some differences between gold and Bitcoin. Bitcoin is infinitely divisible, so I can divide Bitcoin easily without having to melt it down. I can divide it into very, very extremely small units. I can divide it smaller than I could divide a dollar, for instance. I can send it at the speed of light anywhere in the world, and I don't have to have the permission of a bank or a government to do so. That's pretty powerful. And I can have some relative privacy if I do that correctly, which you're not going to have with gold. One thing where that Bitcoin doesn't have that gold does have is history. So gold's really been the most valuable store of asset, or just asset in general. It's been the most valuable for the last 10,000 years. So it has better history than Bitcoin, but I would say Bitcoin has proven itself over its lifespan, over the last 23, 24 years, or sorry, 13, 14 years. And so Bitcoin has kind of emerged as this interesting store of value. It's also completely liquid, trades 24/7. I can convert it to any currency or asset I want pretty much at any time in the day. And so it's pretty interesting. And if it was up to me, I would store most of my assets that I wanted to protect against inflation and just kind of have, I would store that in Bitcoin personally, or I would have a big Bitcoin reserve, especially during a time like this. So I kind of want to provide a different perspective on inflation. I feel like we get the CPI and it comes out, and right now maybe it's lower than it was a year ago, and so you'll hear the argument that inflation's coming down. Oh, inflation's coming down. Inflation's coming down. We don't have inflation anymore. It's going down. That's not what's happening. People go to the stores, they wonder why prices are still going up, but they're telling me on the news inflation's going down. Well, depending on how you look at it, inflation's actually still going up. The number that they give you is just the rate of change year over year. So if inflation this month was 3%, but last year this month it was 4.5%, the news is going to tell you inflation's going down, but you're going to go to the store and wonder why prices are going up. Well, that's because last year the rate at which inflation was going up was 4.5%. It's still going up this year, but it's only going up by 3% now year over year. So we're actually still compounding onto the 4.5%. It's actually 3% on top of the 4.5%. It's not going down, it's growing exponentially. And so this chart shows you that cumulative inflation over time. And you can see since 2020, if you're watching on YouTube, a big spike. We kind of were in this trend for 40 years along this blue line, and now we've absolutely completely exploded. And for instance, if let's say what would cost about $40 in 1970? Let's say you wanted to rent a hotel for a weekend, and that cost $40 in 1970. By 2023, that same hotel would cost about $310. So you could see inflation, it's never actually coming down. You can see during the financial crisis, it came down a little bit, but it was still well above what it was even 6 years before that. So they're printing money out of thin air. We have to work for it. They print it out of thin air. And what happens is when you measure something in a specific unit, so say we measure time in dollars, an hour's worth of your time and labor is worth $7.25. So that's the unit we've applied to time, or a certain value. We apply a dollar unit to it. If a government or any entity creates that unit out of thin air, and now we have more units, you've just made the measuring stick bigger, and so the unit itself is worth less. And so as they've printed money nonstop since 1971, you can see that the dollar is losing its value, and that's not going to change no matter what propaganda they throw at you, no matter whatever your favorite political candidate says about how they're going to help the economy. As long as we're printing money, we're destroying the value of the dollar, and we're poisoning the blood. The dollar is like blood that goes through the economy, through society. Everybody has to measure themselves in dollars because that's what we pay taxes in. But if the dollar is poison, then it's killing everything it's running through. It's slowly killing you. Inflation slowly destroys you. It takes your time away. It's literally time theft. I have to work for the value of $100 today. And let's say I save that $100. And then I want to go spend it in the future. Now it's worth less. It's like I worked less time. My time's literally being stolen from me. And that is a crime. So don't let anybody tell you differently, basically. And find assets like Bitcoin, like gold, like real estate, like stocks that will save you from the insidious poison that is inflation. All right. With that, let's end on a different note. Let's take a look at some charts. Let's take a look at Nvidia, talking about charts going up. Nvidia over the last 5 years is up 2,901%. That's pretty intense. I wanted to look at this chart not only to look at the explosion of growth, but to just talk about it a little bit. I see a lot of euphoria online about people investing in options in Nvidia or buying shares, whatever, saying the valuation is still attractive somehow. And I think you just have to take a step back and realize what's happened here. You can't keep going up at this rate forever. This is a great company. I'm not taking anything away from Nvidia. This is a very, very one of the most important companies in the world right now. One of the most successful companies in the world. Their earnings, revenue are exploding. They really don't have a ton of serious competition in what's driving most of their revenue right now. But you have to always take into account the price of the asset itself. And Nvidia can't continue to compound at 2,900% every 5 years because you'll get to absolutely outrageous prices that just don't make any sense whatsoever. And also, Nvidia, the company, can't continue to compound its earnings as it is right now. So I think it's just time to be a little bit careful. If we're looking at the chart, I mean, I wouldn't even be super surprised to see it come down to like $95, right under this $100 mark. You have some support there, but it's really been exponential parabolic growth in the stock price specifically. And I think it's just important to always take into account price and valuation before you go into an investment. Last chart of the day I want to take a look at is Bitcoin. Bitcoin, we talked about it earlier. It's kind of made new all-time highs here and come back down below the previous all-time high, actually, because we're sitting at about $60,000 right now. Like I said, we've been consolidating up here between $60,000 and $70,000 for about 3 months. Obviously, it's impossible to know whether we're going to make another leg down or break above this kind of consolidation next, but there is a lot more demand coming into the Bitcoin market. The supply is being theoretically shrunk. I know that there is speculation of Mt. Gox selling and things like that, but at some point the dust settles. You can't rewind the halving. You're only getting a certain supply from the miners, and there is going to be continued demand in this market. Demand's going to grow, in my opinion. And I do think that if we get lower prices than where we're at right now, it could be a really, really good opportunity to buy some Bitcoin. Maybe if you don't have any, or if you're looking to build the position further. So with that, I'll wrap up today's episode. I really appreciate everyone joining me today. I hope to bring these to you every Friday, just a quick rundown of what's going on in the week, give you my thoughts. Let me know if you enjoyed it or if you didn't enjoy it. Leave a comment if you're on YouTube. You can send me an email if you're listening on Spotify. The email should be attached to whatever platform that you're watching or listening on. And with that, I will see everyone next week. Thanks.